Perfect. So good afternoon, everybody, and thank you for coming along today and making it out of the snow. I'm going to talk a little bit about the Irish economy, and I know from your studies that you're used to the concepts that economists think about and use when they're talking about the economy. So you learn about consumption and investment and government exports and imports. You know that the main players or the main actors are households, or firms, or the government. So what I want to do is go through what's happening in the Irish economy through that lens. So if we start and we look, first of all, at the consumer. We should be coming up on screen here, and we can have a snapshot view of what's happening with households. So they're a big important part of the economy. So that's all your guys, your family, your friends, and so on. You're out there spending on goods and services. This is a graph of retail sales, and you can see it's in positive territory. So people are spending on cars, they're spending in bars and restaurants, in department stores, on electrical goods as the property market has started to improve. And that picture is very positive. As I say, consumers are an important part of the economy, and the fact that they're back spending is really significant, and they're going to be a key driver when we look at our forecasts for the next couple of years. Households in a reasonably good place. One of the reasons why people are spending is because inflation is low. And again, you'll know from your study that inflation is around the price that you're paying for goods and services. That's quite muted at the moment, meaning that people get more bang for their buck. So you're getting more for what you spend. Households also generally happy, and for a number of reasons. This is a graph which shows you consumer sentiment. So at the Bank of Ireland, every month we survey 1,000 households. So you may have gotten a phone call at some stage, or your mum or dad may have gotten a phone call from our survey company asking a whole load of questions about how people feel around the economy, around their own finance, and so on. We bring all that information together and track the mood of consumers. And you can see there how it's been faring back since January 2016. What's noticeable in the latest data, it's generally going up. So people are in a fairly happy place. And there are a couple of reasons for that. One of them is around the fact that the labour market is improving. So this is the fact that people can get jobs. Jobs have been created now in the economy on a regular basis. Going back to 2012, we started to create jobs again, and that's grown, and you can see the line going up there in more recent years. Importantly as well, when we think about the economy and we think about the recovery, it's key that it isn't all just to do with Dublin, that it is happening, even though we have quite a few Dublin schools here in front of us, but for all the guys around the country, it's important that those jobs are spreading out. And that is the case with the vast bulk of new jobs now being created outside of Dublin. So there is a spreading out of the recovery, which is important for its sustainability. So people are in jobs, and the unemployment rate has come down, and you know again from your studies we're down to around 6% now, which is very low. It was at almost 16% at the peak. So there's been a huge shift, and that's generally supported people, and they're feeling more positive. Also, households' own finances are in better shape. So over the course of the boom, a lot of people built up debt. They borrowed money, and in recent years, they've been trying to pay that back down. And would they be paying down debt? It means they haven't been spending. Now that the debt is in better position, they have money to spend again. And we see that debt ratio there, which is what that graph is showing you, has come down very significantly. Household finance has also been helped by the fact that wages are beginning to tick up a little bit. Part of our surveys that we do on the monthly basis, so we ask people around their expectations for wages, and 48% of workers said to us when we asked this question in January that they think they're going to get a pay rise this year. When we asked the firms, 44% of them said that they were going to give people a pay rise. So at least the two are aligned, they're on the same wavelength, and that's providing support as well. So all in all, for the consumer and the household picture, in reasonably good shape. There's tailwinds there that are going to support consumer spending into this year and into next year. So that's one key player in the economy, the consumer and the households. If we take a look at another player, the business environment. So consumers are buying all these goods and services, the firms are producing them. As part of their production process, they invest in machinery and equipment. We see firms investing in research and development, in intangibles. We have the construction sector that are building. So this graph is capturing that investment story, and you can see there it is ticking up again. So it's in a positive upward trend as well. And firms, generally, the environment is pretty good for those as well. One thing, though, that is coming through in the data is that they're a little bit worried around a couple of things. And one of the key things that they're worried about is Brexit. And Simon is going to talk to you about that in a little bit more detail. But what this graph is showing you here is business sentiment. So this is 2,000 firms. We ask them questions every month about how they think their own activity is going. Are they going to hire people? What's their view on their costs? What are they worried about? And so on. And we pull all that information together there, and you can see the trend. There's two key points on it. You see when it reaches the high point there at the beginning of the graph, that's June 2016. So just after we did the survey, the UK voted to leave the EU. So when we did the survey in July, you see the big dip. So firms, not happy with this, very worried what this would mean for the Irish economy. When you come along there to the other low point in the graph, which is November 2016, this is when President Trump got elected in the US. So you can see from that Ireland is a very small, open economy, that we're very much influenced by what happens on the world stage. So we had two big events, the UK decision and the US election outcome, and you see the reaction of Irish firms to it. Since then, sentiment has picked up a little bit, but it's still below where it was at the beginning. So Brexit weighing a little bit. That said, firms are looking at the Irish economy. They're looking at all the consumers here who have said are in a good place and are spending, and they see that there's support there from the domestic economy. So 2 and 3 of them are still looking to expand their business over the next 1 to 3 years. And a lot of the firms that we have are also exporters. So they're not just selling to the Irish consumer, but they're selling abroad as well, into the UK, into the US, into the Euro area. They're our main export markets. And that graph is just showing you the picture for exports over the last couple of years. You see where the previous peak was, you see where the new peak is now. So things have improved a lot. That is being helped by a couple of factors. One of them is the international environment. So if firms are selling abroad, it always helps if the people that they're selling to are in a good place and want to buy. So our main trading partners, there's growth happening in all of those economies. You can see there in the graph that the US is growing, and Trump's stimulus package is going to provide some support there. The Euro area has picked up as well. The UK, which I think is missing from the graph, but that's growing too, albeit Brexit is a factor there. So generally, a positive picture there too for the exporters. One of the things we have to watch always when we're exporting or selling abroad is where there's a currency piece to it. So we're watching what's happening with the pound, watching what's happening with the dollar versus the euro. And we have a few headwinds there. But all in all, for both the households and the the households and the businesses, the two key players in the economy, things are in reasonably good shape. And if we sum it all up, we would say that the economy is doing very well. Ireland has been near the top end of the Euro area growth league table for a number of years now. 2018, we're looking at a GDP forecast of about 4.7%, so puts us there for the 5th year running. So that is no mean feat.